The outlook for the global economy has slightly improved since our last forecast, but the pace of trade expansion in 2023 is still expected to be subpar. So we are now projecting a merchandise trade volume growth of 1.7% in 2023. Goods trade was remarkably resilient for most of 2022, despite a very challenging macro environment. During the first 3 quarters of 2022, year-on-year trade volume growth actually averaged 4.3%, but an abrupt decline in the fourth quarter then dragged growth down for the year to 2.7%. The downside risks to the forecast include the vulnerabilities that have been revealed in the banking sector of late. It appears that these recent banking failures in the US and Europe have been mostly contained, but rapidly increasing interest rates could create further strains in financial markets that then could, of course, also have implications for international trade. But there's also some upside potential, particularly from the relaxation of COVID-19 restrictions in China, particularly for services such as travel and transport. And of course, a peaceful end to the war in Ukraine and a reduction in broader geopolitical tensions would also greatly improve the outlook for the global economy.
The fact is that trade in digitally delivered services is booming. According to our estimates, global export reached $3.82 trillion in 2022. And what is impressive about these services is the pace of growth, an almost fourfold increase in value since 2005. In 2022, digitally delivered services accounted for 54% of global services trade, and what is more interesting is that they account for a fast-growing share of total trade, and this gives us a clear signal that the future of trade is services, and it is digital.
Global GDP is expected to return to more normal levels, and trade growth is expected to rebound in line with that. The rebound is slightly stronger, but that's just part of the nature of trade. Trade tends to be more volatile. So when world GDP increases, trade tends to increase more. When world GDP declines, trade tends to move in the same direction, but just more so. So you get a kind of a whipsaw effect.
Countries that were heavily exposed to falling exports from Ukraine and also Russia, both in energy products as well as in food products, by and large were able to cope quite well by securing alternative sources of supply, sometimes also switching to other goods. To me, this really is a clear indication of how important it is to have open markets. In some sense, outside options are what you need in times of crisis, and outside options is exactly what the multilateral trading system gives you.